Scott Durfey and Caroline Woods are with me this afternoon. We've also got Cisco earnings. Scott, what a close, what a day, all-time records. And it was pretty much a straight shot this month. So I guess inflation was worth celebrating.
Well, or lack thereof. And, you know, when we kind of see a little teeter-totter and balance act happening over the last couple of days, right? We get a little uptight yesterday, comes in a little hotter than we thought it should. We get a little more relaxed today. So, you know, and these rallies, these types of things that we're seeing right now are definitely helping the attitude and the outlook of the bulls in the market. A little broader base, a little more fundamental driven. Those kinds of things always help.
Yeah, it's good when tech is at the front. You know, it's not our little utility rally that we were getting. You know, everybody showed up to the party today, Caroline, and the big horses, you know, that we were able to rely on came back.
Yeah, everybody except for those meme stocks that kind of fizzled out today. Also saw kind of a mixed picture in terms of retail. But yes, we saw strength across the board when it comes to tech. Aside from Tesla and Amazon, gains across the board there. A really big standout was Dell today. Dell ended up closing up. You know, it was up about 9% heading into the close, and now it ended up closing up 11.2% after that bullish call from Morgan Stanley. I think that that's notable just because the AI rally certainly seems to still have legs. Dell was already up big year to date. Now it's up 94% year to date, and Morgan Stanley basically said it's a top pick, and you know, it's the way to play the AI momentum. And really gave a huge boost to Dell shares today. Of course, we're going to talk about Cisco in just a bit. Cisco has much less exposure to AI, and I think that that kind of shows when you take a look at the stock performance.
Yeah, this was a really key day for the AI trade, the tech names. NVIDIA ahead of earnings next week, too. Scott, it feels like that gives us something to look forward to.
Always does with NVIDIA. NVIDIA seems to steal the show no matter what's happening with it recently. And I expect that will actually be the case next week, too. A lot of stuff happening for NVIDIA that can also be seen as positive, as growth. And I love what Caroline just alluded to. You know, we are really still riding this AI wave. And I think that, you know, based on the AI wave, we are going to maybe perhaps even see some of that effect as we get the Cisco earnings as they're coming out. But this is an important thing for us to keep in mind, to keep an eye on. NVIDIA definitely kind of, I don't know if I would go so far as to call them the bellwether or the leader of it all, but it's hard to argue that they're not.
All right. Okay, NVIDIA very close here to fresh highs. You know, we'll test, I guess, a little bit the willingness of how we want to extend our tech optimism this afternoon, Caroline, because Cisco has been actually one of the worst performers if you look back over the last 8 months. You know, it's not bad in the last couple weeks, but this is a real laggard, you know, and a legacy company that has plenty of cash and, you know, some shareholder-friendly ability, but just has not been part of the race.
What Cisco has going for it that an NVIDIA doesn't is the fact that expectations are pretty low for Cisco heading into this report, given the fact that it's still negative year to date. I believe only about 2% of its revenues are attached to AI, but we know that there are plans for you know, more AI involvement for Cisco. But they've been struggling with inventories, and the last time they reported earnings, they said it's going to last for a couple more quarters. So I think at least we already know that, so maybe, you know, it won't, you know, the bar certainly isn't as high. Maybe they can surprise to the upside.
Yeah, this is one where the bar is low, to your point, and the growth is meager. As we heard our guest David Schassler talk about finding scarcity in a stagflationary environment. Growth can be scarce, and that's why we get valuations where there is growth. Cisco ain't it. So, you know, if the stock does get some love this afternoon, I do think that would be kind of interesting because it certainly does not fit the bill of what has worked. I got some numbers. Let's hit it real quick for those watching this. After all, I mean, this is still a $50 billion revenue a quarter company. It's still a massive stock and does pay out a 40-cent dividend. They're not going to change the dividend, though. It's going to stay the same. That's not going to really be a draw, I don't think. That would be the type of thing that Cisco could do, but shares are still popping anyway. Their outlook for revenue is pretty well ahead of their previous estimate. They're saying fiscal year revenue could get as high as $53.8 billion, and the range is pretty tight. 53.6 on the low end is a full $1 billion more than their old high end. So they shifted their entire range up by a couple of billion, and I think that's what the market's going to love here. I mean, generally speaking, that's a winning type of report, Scott. When you add on a couple bill at a time when nobody really expects you to grow much, that's a nice surprise.
Yeah, definitely a nice surprise, but it's kind of in keeping with what we've seen over the last 4 reports from these guys, right? Going back to April 2023, beat earnings per share 3.25%. Going back to July, beat 7.68. October, beat 7.71. January of this year, beat quite a bit less, but still 3.96% higher on earnings per share. And so, this is actually also, and we got to remember this is the first earnings that's come out since the Splunk merger, right? And so point. That also should be helping, move things in the direction that I believe that we're going to be seeing them move.
Yeah, it's a really good point. And the idea that maybe they can tack on and some growth through acquisition now that that's fully completed as of like 2 months ago, March, the right. Deal officially done. So good reminder there. Trailing revenues are still going to be negative, but, contraction on the top line. One could argue that this kind of fits into a inflection in the trajectory, Caroline, of contraction to maybe something a little bit more impressive going forward.
Well, that 13% decline in sales actually still is better than what analysts were expecting. Revenue came in at $12.7 billion. The expectation was for around $12.5 billion. So still a beat on the top line, despite the fact that it was 13% year-over-year decline. Splunk contributed $413 million to that revenue number. Total subscription revenue came in at $6.9 billion. That includes Splunk, which is about 54% of total revenue. In terms of some of the commentary that I'm seeing just cross the wire from the earnings statement, I think this will be key. We are seeing stabilization of demand. So, I think that that's going to be, kind of important to dig into. You already talked about the actual guidance that they had given, but I think also we're going to have to really dig into what they have to say about inventories, because that was, they were saying that inventories were taking longer for customers. It was taking customers longer to clear their inventories, and that process would still take another quarter or two. But based on what I'm seeing, just in terms of the initial reaction to this beat on both the top and bottom line, also 6 cents higher than estimates on the bottom line, it looks like it's a positive reaction. And again, could be because Cisco was down almost, 2% year to date. Yeah,
it seems like there would be plenty of qualms to be had on this if the market wanted to find them. Obviously, the trailing numbers are still pretty ugly, even if better than expected. There's also a negative earnings impact of integrating Splunk, which is, normal and expected, but just does kind of reiterate that some of their stability in revenue is coming from acquisition, which is a little bit more costly. Their services side is only doing 6% growth. So where there is growth, there's really not much, but it might be enough to eventually turn it around next year. For the analyst expectations for 25, they think Cisco will be able to grow low single digits. So there's hope here, but I was kind of hoping, Scott, that they might do a dividend hike or a big buyback shift or something, because it seems like that's the type of thing they could do. They've got $700 million of cash just sitting on their books.
Yeah, I agree. And, and these are one of the things perhaps that maybe they're positioning for. Are they positioning themselves so that they can do that with even greater effect in the future? I see it that way, too. I'm wondering, why aren't we waiting those kinds of things, especially with the dividend increase? Actually, that's not true. Maybe even more so with the buybacks. But these are things that, we'll see. We'll see how it all plays out. I think that moving in the right direction in today's market is, objective numero uno, right? That's the first thing that we got to be happening. Yeah, and they're doing it. So,
for sure.
We'll see how it goes from here.
And that was also the last quarter cash flow I gave. The cash flow for this quarter should be just shy about $4 billion, 3.8. So, all right, market's okay with it. Market's happy. Market was happy all day. So we're going to carry through some love in the afternoon for Cisco here. All right, appreciate it, guys. Scott Durfey Caroline Woods, Cisco shares up pretty big, an add-on to NASDAQ futures and S&P futures strength, and a legacy name that's been under pressure. Certainly a nice cherry on top of a good day for the stock market. A great day, a new record.